Hi YouTube, it's Yashi. In today's world, investors are having a hard time to find some more stable investment that are not as volatile, that do not jump up and down 20% on a daily basis. People like Warren Buffett suggest to invest in the S&P 500. Katie Woods said that Bitcoin is the best investment in the world. But even this year, both proved to be extremely volatile, and most importantly, with a downtrend on both sides. Of course you're frustrated, and I'm too. The only asset that actually proved to be pretty stable throughout this whole year seems to be real estate. And before you start commenting, yeah Yashi, but real estate is not accessible for the average broke person, yes, you're right. And this is exactly why I'm here today to make this video, as it is possible to invest in real estate with little money in commercial and residential properties through these passive investing apps, and one of them is Fundrise. Before I actually got started with flipping and renting out properties, I opened a Fundrise account and have been adding money to it ever since. In this video, I'm going to show you what Fundrise is, what option it gives to you, what kind of real estate it invests in, and the amount of risk it is willing to accept. I'm then showing you a quick update on my personal account, then give you an opinion and compare the returns with my active real estate investing that I do under my personal name. So what is Fundrise? Before 2010, the only way for a person to invest in real estate was to either own and buy rental properties, or buy REIT stocks, or own a private REIT. REIT stands for Real Estate Investment Trusts. And stock REITs are companies that invest in real estate, and because of law, they're kind of forced off paying out 90% of their net profits back to investors through dividends. These companies can be bought on apps like Robinhood, and on average, they pay dividends over what other stocks in the market pay to people. This one is a good example, and this one is another good example. Although it is a good way to generate dividend income, they had one issue. They were on the stock market. So like general stocks, they would fluctuate in value based on the market sentiment and not really based on the underlying value of the real estate. So yes, the concept is cool, but we cannot really consider it real estate investing, as the amount of stock you own does not represent the actual value of the real estate it owns. At the same time, we also had private REITs. These are not on the stock market, but accessing them is extremely difficult. Not being on the stock market means that your amount of investing is tied completely to the real estate it owns. But if you want to sell or get into that position, it is extremely difficult, because you would have to actually find a physical person who is interested and has the money to buy your position. Or if you want to get into a REIT, find a person who is willing to sell you their position and you having enough money to invest in it. And most of the cases, getting into a private REIT requires more money than buying an actual rental property. So because of a high barrier of entry, it kind of defeats the entire purpose of getting in another way into real estate. In 2010, Fundrise came in to innovate the status quo. They took the concept of the private REIT, which is not traded on the stock market and is tied to the value of the real estate, and made it easily accessible and tradable by creating a different kind of REIT called e-REIT and making it tradable on their platform, which can be considered their private marketplace. In other words, it allows the average broke young investors like me and you to invest little amounts of money to own partial shares in different real estate projects across all of America, to then get the equivalent amount of profit back to you. This basically means that the value of your e-REIT shares are directly tied to the real estate that they own, kind of like what happens when you own a house directly. This also solved the problem of private REITs, as they created their own platform in their own REIT marketplace. And through mass adoption of the app, now they have hundreds of thousands of investors, it became easier and easier for investors to get in and buy shares, or to get out and sell their shares, either to Fundrise itself, to other active investors, or new incoming investors. Now, it still takes pretty long. It can take up to a full quarter to sell your entire shares of Fundrise, but it is definitely much easier than selling your shares if you own a private REIT. So yeah, in other words, Fundrise allows you to become a real estate investor with little capital, with definitely more flexibility than owning a private REIT. So what do these guys offer? When you open an account with Fundrise, you will go through a questionnaire to see what kind of mindset you have. Do you want to see immediate results? Are you more of a long-term person who prefers higher gains but over the long term? Or are you in the middle? And according to the answers you give in this questionnaire, Fundrise will try to direct you in one of these three investing types: income, growth, and balanced. Income focuses on investing on more cash flowing assets like rental properties, or loaning money to big builders to build apartment complexes where builders then pay an interest back to Fundrise, which then goes back to you in form of income or dividend. These assets are very quick to becoming operational and they start paying you very quickly. Growth, on the other hand, focuses on more long-term projects, building something from scratch, buying something and improving it, or investing in areas that Fundrise deems to be high growth areas in the next 3 to 5 years. The returns will not be immediate. You will have a longer period of time with little to no profits are made, but once you get to that 3 and 5 year mark, your profits will start to explode. Last but not least, which is the one I chose, you have the balance investing, which is a mix between income and growth. In my case, I saw part of my portfolio, which was around 30%, starting to make money immediately. At the time, I had $5,000 in. I was saying 50 cents a day flowing into my account. Not a lot of money, but still nice to see it grow every single day. But then after 3 years, and after a lot of actual investing I did every single month, I was adding around $800 a month, I had quarters where I would bump up by $2,000, which to me was crazy. All this because my growth part of the portfolio started kicking in and started bringing in profits. Now I'm very happy with what I chose, but everybody has their own priorities, so you could choose yours in case you're interested. So what kind of real estate do these guys invest in? Of course, their main focus is residential real estate. You can see here it's mostly apartment complexes, suburbs, single-family homes in specific areas like Washington, D.C. But in the past 2 years, something very interesting happened. The Fundrise team started noticing the supply chain bottlenecks that the pandemic was bringing in and started investing in warehouses that they would both rent out to bigger companies like Amazon as well as smaller e-commerce stores. And honestly, by looking at the numbers, it seems that all of these warehouse projects were 100% successful. So yeah, the cool thing of pretty much a typical Fundrise portfolio is that all of these properties, all of your funds are invested and spread across all of America in different real estate types with different risk factors, which follows the general rule of a diversified portfolio. An awesome factor, especially for the entry-level investor who has little to no experience, and especially because all of this diversification is made by the Fundrise team without you having to go through the entire hassle. But let's give you a personal update on my portfolio. As of today, I'm around $40,000 in portfolio value, and I got a total return of over 10K. By now, I should have 50K in value on my portfolio, but part of that return, specifically around $3,000, has been paid to me in form of dividends, and I chose not to reinvest it in the platform and simply have it drop back into my personal bank account. And by the way, yes, you could reinvest your dividends automatically if you tell Fundrise to do so. Now, saying that I made 25% in 4 years, if you do the mathematics, we're getting pretty much there, would be very wrong, as I started out only with 5K and I kept on putting in money on bi-weekly basis. But I can give you the general returns I made on a yearly basis. At the end of 2018, I made 1%. In 2019, I made a hefty 8%. In 2020, it was a 7.3%. 2021 was the best year, and that's where the growth portfolio kicked in. I made 23%. In 2022, while the rest of the markets are down 10, 20, 30% in some cases, Fundrise still yielded 5+% return. So yeah, on average, I made 10% a year if we put all the numbers together and do some math. And this happened on a yearly basis throughout the past 3.5 years, 4 years, let's say 4 years. Although the returns are very similar to the average 100-year trend of the S&P 500, which is the general stock market, you also got to consider that a third of that profit was in dividends. Now, find me any stock that pays a 3% dividend and grows 7% on a yearly basis. And yes, although you can find some, you still have to go through an entire research and still do some sort of a bet to find a good stock. And that's the main thing. All of this return occurred with me simply putting in money and not moving a finger. 100% passive. The only thing that I had to pay for was their advisory fee, which is in the past 4 years was around $100. So 1% of my total return. And to me, that's more than acceptable because on average, I pay 10% of the monthly rent to my property managers who are managing my rental properties. So 1% is amazing to me. So how does it compare to my active real estate? So me investing in rental properties or in flipping homes. Actively investing in real estate definitely makes you much more money. On average, my rental properties make 15+% returns a year just in rent. So that's all dividend. And when I flip a house, on average, I make 40+%. My last flip was close to 50%. And I did that in 5 months, not a full year. So awesome returns, but compared to Fundrise for much more stress. I could take out my money from Fundrise and buy in cash 1 or 2 rental properties in some of the areas I invest in, but I won't. I kind of love to know that my 45k are invested throughout 260 plus properties in all of America, and that people like Jeff Bezos are partially paying rent to me for a warehouse close to DC. And all this is happening while I am not managing it, while I work on YouTube, while I work on my other real estate projects. I definitely consider this a good source of income for the future and a good source of potential future retirement. I initially thought that over the years I would start selling off my position to buy actual real estate, but with time and the updates I saw in Fundrise, I really grew fond of the platform and of the team that is doing a really good job in educating all these new investors through keynotes, news, and my favorite, general podcast that they release on their Fundrise platform. And all this on top of yielding awesome results compared to many other real estate companies. So to me, this is a very valid option. And although this is not financial advice, you should definitely research what they do, research the number, and check them out. Also, if you're interested in opening up an account with Fundrise, you can use the link down below for some extra discounts on their management fee or some extra perks depending on the month you're opening the account. They always change on a monthly basis, so I don't know what they have right now. This is all for now on Fundrise. I hope this gave you the insight you needed. And if you have any other questions, please leave them in the comments below. As I post bi-weekly updates on my Fundrise account, I might add an answer to your question directly on the next video. Thank you for watching. Ciao.